Happy Monday and welcome to another edition of Accessible Alpha's Market Update, this time for the week beginning October 7th. Welcome back. As always, please keep in mind that anything that we talk about in this podcast or on the video on YouTube, if you're watching, is for informational and educational purposes only. So please take the information as is and certainly not trading advice or instruction or anything like that. All right. I say this every week, but I actually have a plan this time. We're going to do this in about 15 minutes. We'll see how it goes. I know I say it every week. I said it last week. We recorded a 40-minute episode. This time we're doing it in 15 minutes. So here we go, jumping right in, a lot to talk about. So first things first, the week really opened with the East Coast dock workers strike, but it actually has since been resolved. So there were some great questions in our Discord, and if you want to join the Discord, it is in the description of the video, but some great questions around, when you see a dock worker strike or any big news event, how does that impact trading? In this case, we have $34 billion in trade currently en route to the East Coast and the Gulf. And the answer honestly is just think about kind of what companies would be impacted by that. So for example, and we're going to cover this in the industry rotation segment, but materials, industrials, staples, things that require a lot of ins and outs when it comes to material could be impacted. So this is a temporary one. The union has come to a decision with the companies at large. Looks like, I believe January 15th is kind of when this resolution is going to go until. So we'll have to wait and see what happens. But, companies like, I found Walmart, Home Depot, IKEA, Samsung, LG. There was, again, some staples in there, some auto companies in there. Just doing a bit of digging can kind of find out what companies could be impacted by news like this. And then you just got to think about how pervasive or persistent is this news event going to be? Something like a strike, hopefully it would get resolved pretty quickly. So therefore, the price shouldn't be affected too much for too long, where you could have other news events like we're seeing, tensions in the Middle East, kind of rise again with Iran, with their missile strike on Israel. That could have a more long-term impact. So we see, kind of tamed the Q4 buying a little bit in the market, but oil was up, bonds are flattening, things like that could be a bit more pervasive. A big piece of news here is that non-farm payroll came out. That was Friday, and it was 254,000 new jobs against the 150,000 estimate. So this was huge. The market certainly baked this in. I'll show you this in the index portion, but bonds are down, and equities, saw a bit of a bump. And unemployment is down, 4.1 from 4.2. So again, great signs. It seems like the domestic economic indicators are continuing to perform well, and we'll see if that can provide a buoy for the bull run that Q4 could hold for us. As of right now, as we've mentioned in previous weeks, we do still have two Federal Open Market Committee meetings left. Right now, it looks like the market is pricing in one, maybe two 25 bip rate cuts. We'll have to see. There's a meeting in November and a meeting in December. We'll have to see how that goes. All right, so let's flip over to the indexes. As we mentioned, there was not a whole lot happening this week on the index side of things. So what I'm looking for is, I have these gray lines here. The gray lines are basically the previous highs from the index. So we have the S&P up on top, the NASDAQ in the middle, and the Dow Jones in down low here. What we see is that the S&P 500 did cross that high, that kind of mid-July high. Same is true for the Dow Jones. But you'll see, even as it crossed that high, there's just kind of staggering price performance right now. This shouldn't be too surprising. We are entering Q4. And while there was a lot of news, again, the Middle East, we have the hurricane, we have, the dock workers strike, we do have some positive economic data. It seems like a lot of this news is kind of, canceling each other out, so to speak. But more importantly, I do think at the beginning of a quarter, it is up to the market to kind of vote on where it wants to transition into. So not a whole lot happening in the market. I am excited to see that we are above those July highs. I mean, the S&P, for example, has already returned about 19% for the year, which is an enormous year. Me as a trader, I just haven't really seen enough confirmation on the market side of things that we're really off and running on the new quarter. So hopefully that does happen. Like I said, we do have a lot of great economic information that is queuing up for being able to buoy a great bull run in Q4. Unfortunately, we're just not really seeing anything yet, and volume is pretty low too, as you can see. So again, a lot of news events, but not a whole lot happening in the markets last week. Just a lot of back and forth, unfortunately. On the winners and losers front, some interesting things here, and I actually wanted to revisit actually a couple of the names. One is Vistra Energy. Let me bring that up here. Vistra Energy we spoke about, I believe it was 2 weeks ago when we were talking about how nuclear is back in vogue after it seems like a few decades, but nuclear is back in vogue because a lot of these larger tech companies like Nvidia, Google, Amazon are talking about using nuclear energy to power their AI data centers. So I think we covered a couple weeks ago the 3 Mile Island project is kind of back up and running, or at least a proposal to get it back up and running. Constellation Energy is fronting that effort, but we do see Vistra Energy as well, which is down in Texas. I mean, they were up quite a bit last week. So again, just in the 2 weeks that we were, that we spoke about them, they're up about 25%, which I think is pretty amazing. So again, it just goes to show it has to be a good company, it has to be a good chart. You can see this chart's a pretty good one. We had some peaks in June, we kind of dipped down, then we got above that June high in mid-September. Those are always things that I'm looking for. It's called a cup pattern, or sometimes a cup and handle pattern. If it not only kind of dips, up to that high, but then dips down a little bit. But everything's seemingly lined up. The fundamentals are not super great on Vistra, but it does have a lot of market momentum, and it is something to pay attention to. And since we covered it 2 weeks ago, it's up 25%, which is pretty amazing. Another one is Apogee. We were speaking about how if they beat on earnings, that could be interesting, because this is actually a very strong chart. You can see this consolidation pattern right here going back to June, we'll call it. But if they having strong fundamentals as a firm, kind of quarter over quarter, if they had strong earnings, given the market rotation that they're seeing, again, their industry group is rotating into vogue, that could be really interesting. Come to find out, it was really interesting. So the market bid on that quite a bit, and they were up about 20, I think it was about 20%. Let's take a look. Yeah, over 20% just on Friday. So, and that gap up as a trader is typically a good indication that trend will continue and persist. Again, we don't know with certainty, but again, all signs are pointing to good things for Apogee. The last one I wanted to bring up, genetics, I guess we'll call it. This one is really interesting because they're up about 1,800% for the year. You can see down here, at the beginning of 24, they're trading at $2. Now they're about $50. That's obviously a very anomalous chart. But what is really interesting about this is AI has been out of vogue for quite a few weeks at this point with the large sell-offs that we saw last quarter. But it does pay attention. It does pay to pay attention to companies like this that are actually posting really strong results. Again, if you kind of zoom out on this chart, let's do this. You can see that their high was actually around $900 back in February of 2021. So they're still quite a bit off their highs. So we're not going to get too excited. And again, this chart is extremely anomalous. But the point here is that here you have a firm as of late that is posting very strong financial results in an industry that's in vogue. We'll call it AI, even though I know it's been out of vogue a bit lately. And combining that with work in biotech, that seemingly is a really great combination. So on this channel, we don't necessarily talk about the management of firms or their particular product market fit, but those things are really important. So I did want to bring it up and say, hey, these are things to pay attention to. And late last week, we also had a great chart, and that company was able to break out to the upside. It pays to pay attention to these fundamentals, even at the product level, to see if it's something that, could be a great long-term play, and they typically are. On the loser side of things, Wayfair was a really interesting one. Basically, even the losers here weren't down too bad last week, really between 1% and 2%. And they're mostly retracements, so it's not like there were big collapses or anything like that. But the reason why I wanted to point it out is that, after disappointing Q2 earnings, they dipped down to this, 38 level, something like that. It seems like, I drew this line here because it seems like the 50 level, the $50 level for Wayfair is a relatively good support level. You can see they were consolidating there for quite a bit. They actually did break through that on their Q2 earnings. They're back above it now, but like I said, really last week is just more about retracement on that bullish trend ever since the oversell on Q2 earnings. So we'll have to see what happens there. But again, maybe an interesting pattern to pay attention to. The other two that I wanted to highlight were Builders First Source. And again, coming back to this cup theme, this cup pattern theme, which can be a really powerful one. This company actually does have some decent fundamentals. I mean, nothing amazing, but it is forming this really great cup pattern. This cup's a bit long. You would like to see this a bit shorter, to be honest, but on the daily chart here, seeing them get back to highs, then you'd like to see a little bit of consolidation near the highs and then hopefully a breakout. So again, more of a retracement last week after this, pretty big bull spike here. We'll have to kind of wait and see what happens. But the last loser is actually one that I'm going to be paying attention to. It's Booz Allen. And the reason why I highlighted it here is, again, really nice bull run over the past 12 months or so. Sure, we missed on earnings in Q2, had a bit of a gap down, but the market seemingly thinks it overreacted to that and brought it back up to this, 160 level. We're now back at the 160 level. We have that consolidation, as I just mentioned, I'm looking for in that last stock, Builders First Source. It could break out, especially with Q4 underway. We'll have to wait and see, but it seems like this chart is a perfect setup. And we're going to get to the trading tip of the week in a little bit about patience, but it seems like it took a while to get back to this point with Booz Allen. It seems like we're there. Sure, we had a bit of a retracement last week, but it could be a good setup and a good trade with a company with really great fundamentals, steady earnings performance, and we'll have to kind of wait and see, but maybe some good macroeconomic factors to buoy its performance. All right, for industry rotations, we mentioned this at the top with really the dock worker strike and then a bit of the hurricane, but then, some energy, which, with the tensions in the Middle East, which are certainly unfortunate, oil, for example, really went through the roof in a few different ways. Because again, and we spoke about this last week, commodities really have a feel of supply and demand, and if we feel like supply is going to be limited, typically demand is going to increase, and so does the price. But let's take a look at just the S&P sector spiders here. I'm not going to cover the individual industry groups that are falling in and out of favor this week for the sake of time, but let's just look at the sector spiders. So what did really well last week, as I mentioned, this is basically going back to the beginning of last week, and what we see is energy posting almost 7% gains in the week relative to the S&P, again, relative to oil. The S&P posted about 14 bips. Again, this was mostly driven by the spike in oil price. A lot of commodity traders, they're always looking for these supply and demand dynamics. And obviously, and it's unfortunate when we have conflict in the Middle East, but that typically means that supply of oil is going to come down or at least be altered in some way. And when supply comes down, demand goes up, prices go up. I think that's what we're seeing here. And we're also seeing this boost effect of, like I said, the Constellation Energies, the Vistras, big boost for energy last week. If we go to the loser side of things, industries that didn't really do too well last week, again, at this short of a time frame, and I'll be honest, I don't typically look at this too short of a time frame in making, longer term investment decisions clearly. But we look at the material sector. I mean, I infer that a lot of this is driven by the dock worker strike. I mean, again, materials are kind of flowing in. Like again, we showed about $34 billion, coming over from overseas into the East Coast and the Gulf. If that's going to be disrupted, then surely the profitability of the material sector is going to go down. Same is true with consumer staples. Again, consumer staples are typically firms that, unlike discretionary, you're kind of always buying them. But if you're always buying them, these are firms that typically have a lot of kind of inputs into their system. And if they're going to be disrupted by a strike of the dock workers, for example, I would expect that to get priced in, and it surely did. The others that I did want to bring up are consumer discretionary. Again, a bit back and forth, down almost 1.5% for the week. But there was a lot of volatility on the kind of discretionary equity side of things as well. Maybe not driven by things like the dock worker strike, but probably driven just by the beginning of the quarter and investors figuring out kind of what they want to do with good economic data, but also a really strong year so far. Do they really want to get back in? It looks like there was a bit of a further sell-off to start the quarter. This shouldn't be news. I covered this a couple of weeks ago. When we start quarters, especially in big bull runs like we've seen in 24, we do see some relative sell-offs, hopefully not very large ones like we saw in July or something like that, but this shouldn't be too surprising. So for next week, not a whole lot happening here. So I think the big thing that's interesting for me is that Friday really kicks off the Q3 earnings calls. JP Morgan typically leads that effort. And there's 24 companies that are announcing on Friday. Typically companies don't announce on Friday at all. Or if they do, they're much smaller firms. But, having JP Morgan, Wells Fargo, BlackRock, and I'll talk about BlackRock in a second, that's kind of what I'm most interested in. And the other thing that I think is certainly something to pay attention to is we will get the September CPI numbers on Thursday. As we discussed earlier, last week we saw great non-farm payroll numbers, unemployment coming down. CPI right now is at 3.2%. I don't think there's really any change expected necessarily, but that'll surely play into how the market feels about these one, maybe two rate cuts in the last two meetings of the year of the Federal Open Market Committee. So I'm going to be paying attention to that and see what happens. Pepsi announces, Delta announces, there were a few other firms, but to be honest, they're either not great charts, not great companies, or they're just a bit too small. So I think Friday is going to be the big day for us. I did want to talk about BlackRock because as I keep talking about, and I will continue to talk about, I'm personally a trader that looks at both the fundamental and technical aspects of a firm. BlackRock has really great fundamentals, especially if the economy is kind of ramping up. Interest rates are coming down. BlackRock, is able to use interest rates very effectively to invest in their business, which engenders returns for their shareholders. Really strong fundamentals there, but I put them in green because they also have a really great chart. So, the idea there is not only do you want to look for good fundamentals, but you want to get in at the right time, both at a market level. You need the market to kind of behave. And again, it's a little stagnating. It's a little stagnant right now, so we'll see exactly what happens. But you need the individual stock to kind of be at the right point where maybe it's ready to break out. All right, so for this week's trading tip of the week, very simply, I just wanted to talk about patience. I know I talk about this a lot. Maybe if you're a day trader, you're getting sick of me saying this and you're like, we can't even relate to this guy. I'm basically the opposite of a day trader. What I've found, and I've day traded many days in my life and have lost money most days doing it. I've found that it really pays to be patient. And what the central concept here is, I put you'll make far more money in the markets if you wait for probabilities to be in your favor. If you overtrade, the market's going to punish you for it. The idea here is that we don't know what's going to happen. I mean, I've been trading for a long time. Like I said, I have degrees in this stuff. I fundamentally understand markets, at least I think I do. But what I've found is that if you're going to be a successful trader, you really got to wait for as many factors to be in your favor as possible and then pull the trigger and exit or enter a trade. If they're not there, personally, I say just don't enter them. If you're like, well, yeah, economic data is really good, but maybe my particular industry is, out of vogue or there's not a lot of price resiliency there. Or, yeah, this company I like, I know it's going down, but maybe I'll buy the dip and bring it back up. Personally, I just don't think those are good trades. If prices are going down, they're going down for a reason. If a market is falling out of vogue, it's falling out of vogue for a reason. If your stock is not at highs, it's not at highs for a reason. There are multiple trading strategies, but I'll just give you my 2 cents. I always feel like you need to wait for everything to be in your corner before you enter a trade. And that takes patience. Again, especially in markets like this, where every day I log in and I'm analyzing and I'm looking and just kind of nothing's happening. So, and again, I'm an equity trader. Surely on the maybe commodity side of things like oil, that'd be a little bit different. But I stick to what I know, and on the equity side, it's a little flat right now. So the quote that kind of backs up the concept is Charlie Munger. Charlie Munger was Warren Buffett's partner at Berkshire Hathaway and passed away a little bit ago, unfortunately. But he says, quote, "I think the record shows the advantage of a peculiar mindset, not seeking action for its own sake, but instead combining extreme patience with extreme decisiveness." As you can imagine, I couldn't agree more. And it is difficult. It's difficult to sit on your hands sometimes. It's difficult to, maybe some things are in your favor, but other things are not. Been doing this for a while, and all I can say is wait for as many things as possible to be in your favor. When they are, those are typically when you have some pretty good winners in your portfolio, and when they're not, you can get stopped out pretty quickly, or maybe if you're a breakout trader, you'll break out, but then things will collapse on a false breakout or something like that. So you can't outsmart the market. The market is a great voting machine. Wait until as many votes are kind of tallied in your favor as possible before you enter, would be my advice. So that's it for this week. Thank you for supporting the podcast. If you're on YouTube, please like the video, please comment things that you like, you don't like, things you'd like me to talk about, and please subscribe to the channel. These come out every Monday morning at 8 a.m. Eastern. Subscribing is the best way to get them. Same is true on Apple Podcasts and Spotify Podcasts. Please rate the podcast. And as I mentioned, the link is in the YouTube video description. Please join us in Discord. It's a great way to be able to ask questions throughout the week, just get a bit of a conversation going. And hopefully some of that conversation or some of what we talk about helps your trading. So thank you so much. Have a wonderful week, and I'll see you soon.